For commerce students and investors, balance sheet and profit and loss account create heap of confusion because of their ample entries. It create a very chaotic situation when you are reading these accounts. And for business personals, the bonus punk trial balance is also there. One entry, wrong entry in these accounts can exhaust the brain and can even take hours or days to identify the mistake and rectify it. So, to discuss the entries, we have made this model. In this model, you first have to make trial balance. Then next you will make profit and loss account and balance sheet. So let's talk about trial balance first. So in the trial balance debit side, we have to record all the assets, all the expenses and losses, all the drawings, all the purchases, opening stock, debtors, bills receivables, cash and bank balance, prepaid expenses, furniture, machinery, building, wages, salaries, rent, and interest paid. These are going to be categorized in debit side of the trial balance. So in the credit side, we have to record all the liabilities, incomes, capital, and sales, closing stock, creditors, bills payable, outstanding expenses, income received in advance, long-term loan, bank overdraft, commission received, interest received, discount received. All of these will come in the credit side of the trial balance. Now let's talk about the profit and loss account. So in profit and loss account, we have to put all the expenses and losses in the debit side and all the incomes and gains in the credit side. So what comes in the debit side? All indirect expenses, rent, rate and taxes, salaries, wages, office expenses, postal and stationery expenses, telephone and internet charges, printing and advertisement, depreciation, interest paid, discount allowed, and bad debt written off. So these will come in the debit side. Now let's talk about the credit side. All indirect incomes, commission received, interest received, discount received, rent received, dividend received, bad debt recovered, profit on sale of asset, miscellaneous income, and closing entry of gross profit. So this is profit and loss account. So in the last, let's talk about the balance sheet. In the asset side of the balance sheet, we bifurcate the entries into two: non-current assets and current assets. Non-current assets contains long-term assets such as land and building, plant and machinery, furniture and fixtures, vehicles, all intangible assets such as goodwill, patents, trademarks, and long-term investments. In current assets, we have those assets which can easily be converted into cash, such as cash in hand, cash at bank, bills receivable, debtors, stock, and inventory. Liability side is bifurcated into three. First is capital and reserves, second is non-current liabilities, third is current liabilities. In capital and reserve, we have the shares of the shareholder. So it has capital, drawings, reserves and surplus. In non-current liabilities, those liabilities which are liable for more than 1 year. In this we have long-term loans, debtors, debentures, mortgage loan. In current liabilities we have those entries which are payable within 1 year. It has creditors, bills payable, outstanding expenses, bank overdraft, and short term loans. So, these were the three accounts which are important in accounting for investors, for commerce students, and for the business. Hopefully, you have enjoyed this business and this will help you out to identify which entries will come in which side of these accounts. Thank you.